I had a conversation today with a gentleman that wanted to take $250,000 and use that to open a life insurance policy. But not just a regular policy, a custom built policy that will allow him to use that 250K the same way that banks use your money that they put in life insurance. If you're curious about whether your bank has money saved in life insurance, I'll put a few on the screen right now. Now, there are several reasons why banks put their money in life insurance, which I've shared in other videos before, but the most diabolical reason, not in an evil way, but kind of an evil genius kind of way, is what this gentleman that I spoke to today wants to do with his money and what you can do as well. For the most part, my clients come to me so they can use their life insurance as a tax-free income for the future. And when I tell them about this additional benefit, they are blown away, and it's just an added bonus for them to help them to accelerate having additional income streams besides the tax-free money they can get from this life insurance policy. What this gentleman wanted to do was he wanted to take this 250K, open a policy, and then 30 days later, take out as much as possible from that policy in order to buy real estate. So why would he want to do that as opposed to just buying the property outright with the cash that he has? The exciting part about taking money out of a life insurance policy is when you take money out of this policy, it doesn't actually get deducted off of your balance. So let's say, for example, you have $100,000 that is available in cash in this policy. When you take out $50,000 to go purchase your property, $100,000 is still going to be earning interest in your account as if it never left. So essentially, you get to have your money working in multiple places at the same time. And by the way, when you take this money out of this policy to do your outside investing, there are no applications, there are no wait times. You request your money, and 3 days later, it is in your account. What this gentleman wanted to do was take his money, put it into a policy, have that money making interest in his policy, while he also takes that money and uses it to purchase property that is also going to make him more money. And the diabolical part on the part of the banks is that this is what they do with your money, right? They take your money, they open policies with it, they are able to take money out of those policies, and guess what they do with that money? Banks are in the business of lending money, right? That's how they make money. So they're going to take your money that they use to open these policies and lend it back to you. So they're making interest off of you on the money that you gave them. Whereas what you can do instead is get rid of the middleman, the bank, and create your own bank by opening your own policy, putting your money in there, and being in full control. So when your money is in this policy, you have money that is gaining interest in this policy. You have the actual policy itself. And one of the core reasons that my clients like to use these policies as well is that in the future, they can have a guaranteed income from this policy that they get annually that is 100% tax-free. I also want to clarify that while you can use a life insurance policy to save in, right, you cannot just put that 250K and take it out right away with nothing else in it. We'd have to structure it to have a few other payments in addition to that, or put that 250K over time in order to make this actually work. I don't want you to think you can just put 100K and that's it and not put anything in. You'd have to have additional payments in there that are close to that first amount that you're putting in order for this to make sense and or adjusted so that it's something that is doable for you. But the general takeaway that I hope that you take is that when you simply have your money in the bank, you take it out, it is gone and that's it. Whereas if you take money out of a life insurance policy, your money is still earning interest while you're using your money to make money outside of that policy as well. This is the most underrated benefit of saving your money in a cash value life insurance policy, but is not the only one. So make sure you check out this video right here for a few other reasons why you might want to consider firing your bank and creating your own personal bank. I'll see you there.